Good evening, good whatever time it is you're listening to this. I hope you are having a good one. I'm going to be going over the SPY and the data sets and the earnings for the week of the April 14th, 2025. And with that said, let's jump straight into the data. We don't have a super busy week this week. We have Good Friday on Friday, which means that the market's going to be closed on Friday. I am not entirely sure if the market is closing early on Thursday. I'll let you know in the next video. But let's go over the data. So Monday, tomorrow, we have the New York Fed one-year consumer inflation expectations at 11 a.m. Not really expecting too much out of that. That's usually a fairly low data set, but the narrative is kind of really driven to consumers right now, with consumers being weakened, or weakened anyway. So that could be a decent market driver. Just be aware of that. Like if we start breaking out on Monday and that's prior to this data set, I would just take a couple hedges or trim some profits before uh, expecting to move up further. Now, we do have Fed Waller speaking at 1 p.m. Not really expecting a whole lot out of that, but kind of what I've been, saying over the last few weeks now. We really need to pay attention to kind of what the majority of the Fed is discussing and has on their mind. So each of these Fed speeches are going to be fairly important. Now, granted, these Fed speeches are, I believe, in a different country. That's why they're so late. I'm not sure where they're doing this speech. I don't really pay attention to them too much. If something important pops up during any of these speeches, the bot will catch it, and we'll find out that way. Now Tuesday, let's see. This one is not going to be super important right now because the narrative's not super manufacturer dependent. The export and import prices really don't matter too much. So Tuesday isn't a very big day for data. Now Wednesday is a very big day. That's when we have core retail sales. As I just mentioned, the consumer is a really big part of the narrative right now. So the retail or the core retail sales, the retail control, retail sales, um, those are going to be really big data sets, and those come in at 8:30 on Monday or on Wednesday. Um, I'm not going to really speculate too much on what the readings are coming in it, but they are saying that they're going up, or that's what the forecast slash consensus is saying, is that the retail sales are expected to go upward. So take that with a grain of salt. The data has been kind of shifting the other direction lately. Now, we also have some industrial production stuff that's not too important. The rest of this is not important. The 20-year bond auction is important though. Um, that's coming in at 1 p.m. Now we also have Fed Chair Powell speaking at 1:15. So that's obviously going to be really huge for the market. Everyone's kind of sitting on the fence right now of what's going to be happening with the Fed in terms of, are they going to start aggressively cutting rates? Are they going to be pausing more? Now, likely, since a lot of the tariffs have been paused, and especially like the big one for China with like the Nvidia chips, the ASML chips, stuff like that, all being knocked off the tariff is pretty huge. So, we're all kind of interested in what Powell has to say right now. Thursday, we have the basic weekly jobless claims, housing starts, building permits, nothing too big in there. Fed manufacturing index, nothing too big right there. Now we do have the Atlanta Fed GDP. Um, Not too worried about that because we do also have one as well. Um, Oh, this is a preliminary release. Preliminary release. Not too worried about those. We have Fed Chair or the Vice Chair Barr speaking at 11:45. He can definitely sway the market a little bit. So if there is anything massive on Thursday, if it's not like the jobless claims coming in with some weird number, then it's very likely going to be him speaking. Now, the 5-year tips auction really doesn't matter. Um, what the A lot of people don't even know what the tips auction is. So the tips is essentially a way to short the treasuries, and it's essentially exactly the opposite of buying a treasury. You just essentially buying a short position. This is used by many people to hedge against their bullish long-term treasuries, or whatever term they're trying to buy a hedge for. Then that's kind of what the tips auctions are for. Now, again, Friday, the markets are going to be closed. I really don't care about any of this data. So, let's see what we kind of have going for next week. A lot more data sets will be added to this very likely by the end of the week. They don't always update automatically, but okay, so that's the data for this week. Um, Not a very special week at all. Now, the earnings, and I'm going to swap the camera 1 second. We do have a decent earnings week. It's not super important, but we do have a couple fairly important earnings on this. So ASML on Wednesday morning, that's a really, really big one. ASML is a massive semiconductor. Uh, this is a huge semiconductor week, essentially. So that's a really important one. And then we have TSM Thursday morning, which again, that's Taiwan Semiconductors. That's going to be huge for semis. Um, and then we have Netflix in the after hours on Thursday. So again, not a huge week, but we do still have some that can sway the overall market. We do have a lot of bank earnings and stuff in here, some brokerage earnings. Not too concerned with those. Those really don't hold a lot of weight in the current narrative and the current cycle. It's not something I'm focused on playing or trading right now at all. So, just a quick reminder before we get into the technical analysis. If you've been finding value in my insights, consider joining my Patreon. For just $12.99 a month, you'll get access to my trades, courses, and powerful tools to help you grow as a trader. I'd love to have you be a part of our team and community. And it's less than 43 cents a day. So if you'd like to join, click in the link in the description. Thanks. With that said, let's go right into the TA, and as always, let's open up the daily chart, and let's open up the moving averages and the Bollingers. And as always, just a disclaimer, if I say MA, that means moving average and then the date of the MA behind it. So the 5 MA, or in front of it, I mean. So the 5 MA would be the 5-day moving average, 10 MA, 10-day moving average, etc., etc. Okay, got that out of the way. So the market closed at 533.94 on Friday. Very, very awesome close. Very bullish day. And the 5 MA currently is at 521.60. Now, this is going to be pulling upward, and I don't have an exact perfect estimate right now, but I'm going to be guesstimating it's going to be in the 526 to 527 range. Now, again, kind of what I've been saying in each one of these videos the last few days, write down on market open where that 5 MA is at, because that's going to be an extremely key level. Now we have the 10 MA at 533.49. This is starting to become within range that we're challenging. The market's currently pushed above that price. It's in the overnight right now. It's at 538.14. So we are going to be testing that area and breaking above it. The 20 MA is at 549.69, and this is actually at a really key level, and I'm going to discuss that in a couple of minutes here. The 20 MA is still a decent ways above us. It's at the 570.59. So we still have a full, 25, 20-ish dollar range on that. The upper Bollinger still far away, but I'm gonna bring it up because this is, the weekly video. This is the Sunday video, where I try to really go over most of the majority of the important information. Now, are we going to be testing the upper Bollinger this week? Very likely not, but it's still good to talk about it because if we have some uh, blowout data or something, then absolutely we can head up there. We've seen that before. So upper Bollinger is at 598.44. Uh, it's still, you know, $40, $50 away from us. Lower Bollinger is at 593. So that's quite a ways below us. You know, these Bollingers have expanded, and as the 20 MA is starting to pull back upwards, which it will be as we start closing in on it, these are going to open up a lot further. Um, they're starting to pull down slightly, but you will see these expanding a lot more as the 20 MA pulls upward. Now the ADL, and again, this is just kind of like a bank account. You want this to go up if you know you want the price going upward. Um, if this is moving up, then funds are flowing into this fund, okay, or this symbol. If this is moving downward, then money is being withdrawn out of this symbol. So, as you can see, the last few sessions have been absolutely incredible on the ADL. I mentioned this in my video last week sometime, but this is actually one of the largest, uh, you know, multi-session increases I've seen, even since like some of these massive buy-ins. This ADL climb has been trillions of dollars essentially throughout all of, you know, the S&P 500. So that does mean a lot. Just on Friday alone, and I haven't even tracked Friday's gains yet, but from what we lost on Thursday to what we gained on Friday, that was over $7 trillion for the market, um, which was that's awesome. That's really good. That means that there's a lot of money flowing back into this right now. Now, again, we have a short week, so we do have to trade it kind of relaxed, but we can still have some pretty massive moves in here. And just quickly going over this, we have a really important gap right here to the 548.62. And I'm going to draw this, and it's going to look ugly for a moment, and I'll explain all these areas in a moment. But we have this very large cup forming right here, okay? And if you pay attention, that is a cup essentially for this larger cup, which means that that's a handle, okay? Um, this is a bullish structure. This is a breakout structure. This is how you head upward more. So very likely we will see heading upward, then we pull down, test, and then, you know, that's how you form the breakout. Why will this happen? If you remember and if you wrote the levels down, where is the 20 mile right now? The 20 mile is at the 549.69 and is very likely going to pull down very close to that 548, very close to that 548.62 range. So the 20 mile is closing in right at the top of this cup. Perfect area to reject, right? To create a handle. And where would that rejection lead into? Well, with the 5 mile pulling upward, with it very likely going to be opening between the 526 to the 527 range, that puts the 5 mile right in here. I'm just going to put horizontal ray right there for now, just to kind of mark that. But as we go up, so each session we will start climbing more. The 5 mile will pull upward towards that. So is it very likely we see the 5 mile being tested closer to this range we're in right now? Absolutely, it can happen. As I said, we had a really major data set with Trump essentially taking the chips and semiconductors off the Chinese tariff. That's huge for tech. This can absolutely get filled out. Now, if this does not get filled out, and before I discuss that if, I actually want to go over some of these areas first. So let's delete the cup for a second. All right, so what are we looking at here? These are liquidity zones, and I've been talking about this in some of the prior videos, but once you enter these zones, it's kind of, you basically go from the bottom of the zone to the top of the zone, and if you reject that area, then you kind of head back to the bottom of the zone. That's how these liquidity zones work, and I haven't had time to discuss that in a full video yet. These aren't just arbitrary zones. They work very structured. Okay. So if we do build support upward, if we do finish out this smaller cup, an a cup's handle, then very likely we're going to stay within this liquidity zone, or retest this range on this um, gap right here, the 536 gap, and then break out and try to push upward further into this liquidity zone and into um, potentially starting into that purple zone. And that purple zone is essentially the when President Trump got elected, and that caused that massive rally from, I believe, 583 to like whatever it was, but the top was 613, right? Once we start building support right here again, we can break back into the zone and start looking a lot more bullish. Now, just to quickly highlight this, um, I showed this from last week, but this is starting to build into a really large inverse head and shoulders. And once we build support up here, and I mentioned that very likely we're going to start building support up here, reject, and work to build real strong support to break into this channel. Once that happens and we build out this right shoulder, which very likely we're going to start testing all the way back up to that 571 in order to do that. Um, Once we start building liquidity right here, that's how we break back up into all-time highs again. That's how you get the moves back up to the top of that channel. And, what's the top of that channel? Essentially all-time highs. So that's kind of the bullish thesis going from here, is to fill a lot of these gaps, build more of this bullish structure, which so far we have some really good bullish structure in here. The ADL is really strong. Everything's telling us that we are heading upward more. Now, what's kind of the bearish thesis in here? The bearish thesis would be that we're going to reject this liquidity zone, okay? That we are very likely going to form some sort of bearish structure here. And this will tie into the bullish thesis too. The bulls and the bears kind of want the same thing here. So very likely going to head upward towards the top of that cup. If we don't just full on reject here, okay, but that's likely not happening. Now, the only difference between what the bulls want and the bears want is that the bulls want to break back upward and have this be a cup's handle. The bears want this to continue rejecting downward and turn this into essentially a large inverse cup. And that would look something like this. So it would essentially go all the way down to there and start to form the inverse cup right there. And what you're looking for is rejection off of the 20 MA, or potentially heading down to the 5 MA and seeing that not be rejected. Now, we had a massive 5 MA rejection on Friday, and that's actually a bullish thing because we're rejecting the level and pushing above it. The 5 MA is underneath the market right now, so any rejection of that level is bullish. So far, we're seeing the market tell us that the 5 MA is an area that they don't want to test right now. They want to actively push away from. And for us to push away from that level means we have to go upward. So very likely we're going to start targeting that 20 MA level, testing that out. Sorry, that's a terrible circle, just kind of looks like a potato. Anyway, fill out that cup, test out the 20 MA, and then head downward and start to test and reject the 5 MA on here to form a bigger breakout. Do I think the breakout will happen this week? Probably not. This week doesn't have very much data It's a shorter week, but we do have an absurdly large OPEX this week, which happens on Thursday because Friday is Good Friday. Friday the market's closed. So this OPEX is probably one of the largest put slammed OPEX out there. And what OPEX means is options expiration. This is one of the big ones. It's not the quad uh, witching OPEX, whatever fancy names they gave them. This isn't that, but this is a super large OPEX because we've essentially seen um, one of the largest corrections, in years. Uh, this is just absolutely stacked with puts, and that OPEX this Friday or this Thursday um, kind of determines what happens with a lot of these puts. So, um, I'm looking for kind of a squeeze out of it. Honestly, I think it's a bullish thing to see good news on top of a ton of puts because that means that people are going to have to close those positions, and closing those positions means you head upward. So that's kind of the thesis right now. Bears just need to look for a structure that's telling the market, okay, we're going to head downward. Until then, we are heading upward. Now, I am going to highlight this one last time really quick. Sorry for the myriad of colors and lines, but remember, this is a very large inverse cup. Okay, we are starting to form that handle. Where that handle rejects can be this yellow area, can be the top of this purple, can be the blue selling channel. But ultimately, this is so far a bearish structure overall. Now, will it stay a bearish structure? Maybe not. Very likely this is going to um, turn into more of like a very large cup. And this is a terrible looking cup, but pretend it's a fancy cup. Um, that's usually what happens with a lot of these very large bearish structures. Usually they reject and turn into very large bullish structures. Am I saying that's going to happen? Not entirely. We just have to take it kind of day by day and, you know, see what happens overall. But this so far is a massive bear structure. Uh, we are seeing a lot of bullishness though. Um, and again, we should be seeing this cup close on this larger, cup and handle, to form that handle breakout. With that said, I'm gonna go ahead and end the video here. Have a safe trading day tomorrow. Have a good day, and I will see you in the next video. Thanks for watching, everybody.